Sydney and Melbourne house prices fall. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and sit down, because, well, house prices in Sydney and Melbourne, a surprise fall at auction, everyone. Now, before we go through this article from Domain, let's have a look at some of these house prices. Here we have from SQM. This is weekly asking property prices in the capital city average. Let me just bring my full screen up. Have a look up there. Only $1.18 million for all houses and just $1,079,000 for three bedders. Look at that climb, everyone. First recession in 28 years, guys. Let's have a look at Sydney. We can see here. Come on, reload. We'll reload. Problem I do it live. There we go. Sydney. Whoa. All houses 1.7, three-bedroom houses $1.5 million. That's nuts. That is crazy. And Melbourne. What are we looking at here? All bedders 1.14, three bedders 1 million and change. Look at Sydney. I haven't looked at this for a few days. For a few weeks. Damn. 1.7 million. 1.5 million for three-bedroom houses. Oh, well, there you go, guys. So let's have a look at this one. Home buyers are showing signs of fatigue in the face of sky-high property prices. Yeah, I don't blame you. What we just saw then, I don't blame you at all. With the median auction price for houses falling slightly last month in Sydney and Melbourne, figures show. So have we reached the peak, guys? Are we going to start seeing a cooling? Is this the cooling of the housing market? Maybe we'll only go up a little bit next year. Not 20% every year. I mean, have you looked at when's the last time you looked at your house price, guys? This is the problem with Australia. You buy a house. I looked at mine. And the returns you make. I didn't buy that long ago. I'm up 80% for doing nothing. Okay? Wait till I get the renovations done. That's insane. Okay? That is just insane. But I also got a whole bunch of utility from my house. And let alone all the people who are investing in housing and then using the equity they gain to buy into others. The issue with this is it discourages people from investing in other businesses, with all the hassle you've got to deal with. And I don't blame people. Guys, I don't blame people at all. And you talk to some older people who bought even longer ago, they're just going nuts with the gains that they've got on their property. It's crazy. Anyway, let's keep going back at this. Sydney's median auction price for houses fell 3.6% in November to a still high 1.95 million, but remains 21.9% higher than a year ago, according to Domain data. Melbourne also recorded a 1.9% fall in November to 1.211 million, still 11.5% higher than a year earlier. It comes as buyers enjoy more choice post-lockdown, so supply is increasing, when a wave of owners listed their homes for sale after being delayed through the winter and early spring by COVID-19 restrictions. This reduced the fear of missing out felt when there was little on the market, making buyers now less likely to pay over the odds to secure a home if they know there will be more options available soon. It also shows buyers' budgets are constrained by the extreme price growth over the past year. Domain Chief of Research and Economics, Nicola Powell, said, "The sentiment of a buyer is changing. They're more wary of not overpaying for a home," Dr. Powell said. "There's this light at the end of the tunnel for buyers. They know if they miss out on this home, they don't need to go gun-ho on a single property at auction. The next opportunity is around the corner." She cautioned that auction prices also fell during some lockdown months. The most recent fall in Sydney was in June, when the Delta outbreak began, and for Melbourne it was September, the last month when in-person inspections were banned. A better indicator of the future path of property prices is the auction clearance rate. Dr. Powell said a clearance rate above 60% suggests prices will rise, and a 70% clearance rate suggests annual price growth of above 10%. Sydney managed a November clearance rate of 70% from a record 5,549 auctions scheduled, albeit a drop from 75.9% clearance rate in October. Melbourne's clearance rate was 71%, down from 72.6% a month earlier, on near-record auction volumes of 6,098. See, supply is definitely increasing. Early next year, Dr. Powell expects a bounce as buyers who missed out in spring turn up at auctions keen to purchase. Even in smaller auction markets, clearance rates are high, sitting at 86.1% in Canberra and 74.9% in Brisbane. The pricey property market has been in focus for the Reserve Bank, which on Tuesday said housing prices had risen strongly over the past year, although the pace of increase had eased in recent months, warning of the importance for borrowers to have adequate buffers. Separate figures from the Australian Bureau of Statistics highlighted the market boom as low interest rates, government stimulus and lockdown savings enabled many buyers to purchase their first home or upgrade to larger accommodation with space to work from home during the pandemic. Sydney property prices rose 25.4% in the 12 months to September, the ABS said, second only to Hobart at 25.7%. There were strong gains in Canberra at 25.2%, Brisbane 19.7%, Melbourne 19.5%, Adelaide 19%, Perth 15.7%, and Darwin 13.7%. On the ground, auctioneers said lower numbers of registered bidders, but serious competition for most sought-after homes. In Sydney, Benson Auctions Director Stu Benson noted a drop in the number of bidders, but said most of his auctions are clearing reserves. They were set based on a heated market, although not necessarily at hundreds of thousands of dollars above the reserve price. That's a good thing, he said. It means agents can accurately price properties, and buyers doing their research can look at sales over the past 4 or 5 weeks to know what houses are worth. Although sellers could see the lower attendance at open homes and felt cautious, realistic owners were still selling, he said, while buyers were hesitant to start bidding, but once an auction began, would make bold bids to knock out the competition. In Melbourne, Biggins & Scott Richmond director Andrew Crotty said with buyers spread more thinly across higher listed volumes, A-grade homes were fiercely contested, while lower quality homes were a little more work. Vendor expectations are probably not 100% in line with the market. That has become a little bit tougher over the last few weeks, he said. But I don't think we can pick a change in the market until it starts next year. Everyone's a bit tired, a bit frayed, and I think when we get back into January, you'll see prices kick on again. Yellis Craig, Northcote director Sam Rogopoulos, has already started to see a shift as some of the wave of listings have sold in recent weeks. Buyers are now eagerly pursuing the properties that were maybe left behind, or were maybe second preference a couple of weeks ago, he said. He saw bidder numbers fall, but is expecting a tick up for some top quality home sales this weekend. So there we have it, everyone. House prices, well, falling in Sydney or Melbourne, guys. So is this the cooling off we're starting to see? Have a look at this video where Shane Oliver from the AMP predicts a cooling of the housing sector in 2023, or the property sector in 2023. I think he's right on the money, but they will open up the borders. I bet you they'll bring people in. Take care, and I'll see you next time.